Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we cover all things from the world of trading and answer your burning trading questions. We've got a good one today, mate.
What have we got in front of us?
It's all about trade conviction. That's the subject for today.
Yeah.
So again, this is a big one. Trade conviction is, I would say, one of the pivotal things because it's very easy to be convicted to your strategy, be, buying into what it is you trade when things are going well. But what happens when you have 3 or 4 losers on the trot? How much conviction do you have in your system or strategy when you're on, metaphorically on the ropes? So again, how do you get more conviction from a strategy point of view? Simple, you've tested that system. It's not that you backtest and think you're necessarily going to get the same results going forward. But part of backtesting any system or having data on that system, historical data, either data you've traded or data that you've tested, helps increase that conviction because you can look at the distribution of trades. You can look at how often it goes through drawdown periods. So part of having that conviction in a strategy is by knowing that strategy and knowing how it has operated in the past so that you're better prepared for what happens in the future. So that's, I think, conviction from a strategy point of view. If you were saying to me, what's one thing that you need to do to have conviction in what it is you trade, make sure you understand it and you've got a decent data sample. But there's different types of conviction as you've adhered to when we were off air.
Yeah, like you just said, there's conviction with regards to if you are just banging out mechanical trade setups, you still got to have that conviction, as you've said, behind the setup, the trust in the setup that, yes, it's only going to be right a given percentage of the time, and you just have to execute. Your job as a trader is to execute. That's it. Nothing else. You follow the plan, follow the strategy. But if someone just jumps in and, I've got this, the plan's there, but they haven't processed all that data enough, then they're likely to be weak once money's on the line. And once money's on the line, they've put the trade on. It fits all of my rules. And then all of a sudden they find they're in the trade and they haven't, and they're looking at all the reasons why it's not going to work out. And one thing I think is really important when people backtest is that don't just backtest and create a load of data. Yes, you need to store all the information to give yourself the data. But it's much deeper than that. Go back over all the trades and look at them bar by bar. How did it actually go? How did the price move to get to that target? Because sometimes price might have shot straight up to target. Other times it's gone sideways and meandered around and you would have been underwater for a while. Maybe not stopped out, but you'd have been underwater. Or it's gone up a bit, then pulled all the way back to your entry before then going higher. That's common. So the more that you can immerse yourself in, if you've got something like that and you're trading mechanically, don't just look at, I've got a summary sheet here and it's right 60% of the time, blah, 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 blah. Go back, look at a load of trade setups, immerse yourself in it as if they are real, because that way you're then going to be able to deal with the price action when you have got money on the line a lot better. Now, that's one form of conviction. Then you've got general conviction where you still got a trade plan, but you're trading multiple time frame analysis, might be some fundamental analysis within that as well. You're not trading mechanically necessarily, so you're not looking at a 1 to 2 risk reward and all of that sort of stuff. But that trader has still got to have that conviction to stay with a trade. When I'm taking a trade, which I might be in for 3 months, 4 months at a time, I have to repeat all the reasons why I've taken that trade. I've also got to repeat all the reasons why I might be adding to that position as time goes by, because otherwise it's very easy psychologically to think, I'm comfortable now. I'm not going to bother adding to this trade. Or even you get into a trade, same thing, you micromanage it because you haven't got the conviction. So you move your stops up too much, or you start peeling monies away. You had your initial analysis. How many people who are watching this will say, I had this analysis and I'd already peeled all this, partial profits, And yet, yeah, I knew it was going to go there. They always say, I knew.
Yeah.
But so they had conviction, but they didn't stay with that conviction. So conviction in trading covers a lot of areas, but you need to have conviction to stay with, whether it's your strategy, if you're trading mechanically, or if it's just a given trade, just to stay with the trade through the whole trade plan, whether you're adding into it or not, and you just got to stay with it to the given targets, rather than you got into a trade and then you start seeing, like we talked about in a previous episode, all the reasons why, such and such's news is out.
Yes.
I'm going to bank my profits now. Hold on a second, that wasn't the plan. And so people start to justify why they're banking profits based on noise and all of that. There was a reversal bar, so I've come out. Oh, God.
Yes.
Yeah, and then all that happens is a reversal bar, and then the market filters around, and then off it goes again, and it doesn't amount to anything. Stay with your plan. There are always going to be reversals that happen that follow through, and you end up getting stopped out. That's why you have a stop loss. Stay with your plan. Maintain that conviction, because it's the conviction, whether you're mechanical trading or you're using analysis, it's the conviction that helps you stay with it. And that is what gets you the end result.
Love that. I think that ties nicely back to what you were saying about backtesting. With the conviction, there's another element. Going back over this, is the amount of traders say, can I just auto backtest the system?
Yeah.
I was like, you can, but if you spend no time actually going through the scenarios. So I always say to people, bathe in the data, spend time looking through the data to look at the losing runs, the winning runs, the trade frequency, all these things. Look at another one is look at the number of hours or days that the average trade is. Look at how much it skews either way. But what you're saying is if they knew how many times a reversal bar showed up within the move and price went on to reach the target, they would be generating a conviction to ignore that noise. There's something that happens. And you can combine the two. Because often conviction drops. I've seen this over and over again. Conviction drops the amount of time somebody is in a position for. They get, I call it position fatigue.
Yeah.
They start to doubt whether or not it's ever going to reach their target. But if they knew the average length of the trade, or they knew that certain scenarios will skew and they could be in that trade, even if it's, the average is 2 weeks, but this trade, they're in it for, 4 weeks. Just knowing that can happen can increase your conviction, because it's not something that you're thinking, what's going on here? So, like you said, conviction comes in lots of different ways. I think it's hugely important to know your system. And one of the phrases I always live with, I've traded the setup 100 times before I ever trade it, because I do exactly the same thing, which is say to myself over and over again, I rehearse the trade. I go through a mental rehearsal.
Yeah.
If the trade hasn't set up the next day, I go back over the reasons why I'm going to be taking that trade. So it might take a week for the trade to set up, but I've been through and I've actually almost traded it before I've ever actually pressed buy or sell, because I want to make sure that I have that high level of conviction going in. And this is why the amount of times people will say, if I just had your strategy, I'd be all right, because you're the expert. It's like, yeah, but there's so much energy, effort, commitment, and conviction that's gone into every single trade that I own that strategy in a completely different way than somebody who just gets it on a PDF and just sees the ABCs of what they're doing. And again, it takes time. It links back to other episodes. It takes time to build up conviction.
It's no different. It's like you said, when people want to see the end result and they just want that. It's the same as people see Usain Bolt and they're like, he's the best in the world. Yeah, but he was running from the age of 5. And so what they don't see is all that years and years of work. Or you look at the Williams sisters who started, playing tennis at the age of 3 or whatever, all those years of work prior to that. And it's no different. Sorry, what's the subject we're talking about? Conviction. And so it's exactly the same with your trading. I've always seen trading as, when it comes to conviction, you have to repeat. You've got to repeat over and over again these things, whether it's the patterns you're learning or even mentally breaking it down prior to taking the trade. Repeat. Just because you've had a bit of analysis, or you say, when that next pattern comes along, I'm going to trade it. No, immerse yourself in that. Visualize how it's going to happen. What the noise is going to be like. We've talked about noise a lot recently. What the noise is going to be like, how the pattern may evolve, and how you might feel once you may be a pullback trader, but when that bar is really nastily and fast coming down, all of a sudden you don't feel like you want to trade it anymore, and all right, you might put limits in or whatever. But the more you repeat something, the more it goes in mentally. So if you're trading a piece of analysis, you don't just do the analysis once and say, oh yeah, I've got that now. You go over it again and again and again. Yeah. So that by the time the trade comes along that you've been hunting, whether it's intraday or whether it's a swing position, at least you've repeated it over and over again. And then once you're in the trade, you repeat all the reasons why you've got to stay in the trade over and over and over again. And I think that's one of the reasons why people jump out and do all these things, because they don't repeat it. Once they're in the trade, then they're just sitting there praying.
Yes.
Please work out. No, repeat all the reasons you've done, the reasons why you took the trade, and all the reasons why, as you said, why price could get to its target, but go about getting there in all these different ways. And the more you go through and visualize all these scenarios, the better you are at avoiding all the things that the other traders out there around the world are going to do, which is jump out, over manage their position, get fearful, all of this stuff. Repeat is such an important process.
Love it. So on to our question, which links really nicely to what we've been talking about, which is, I think, when you were saying about traders doing things they shouldn't, the question here is, how do I break my addiction to winning? And I think a lot of what you were saying, the result of people's addiction to winning is getting out of trades too soon. It's, risking too much. There's all these things that go on as a result of traders being addicted to winning. And I think it comes back to the simple premise: as humans, we love to be right. We're rewarded for being right. Where being wrong means we're shunned from the group. We're out of the tribe. It's literally in our DNA that being right is, linked to success. And there's all these subconscious and sometimes conscious reasons why, as a human, you're like, I want to be right. The other thing, you could have put in a ton of work. Like we've just been saying, you've spent time rehearsing the trade. You've put all this time and energy in. You've done all this backtesting. You've done all this work. You've spent all this time on the charts. You want some reward for that. And then you combine that with humans being more and more short-term orientated. You go in and you have 3 losing trades. You've done nothing wrong, but you want some recognition for the fact that, I'm putting all this time, energy, and effort and money into trading this particular system. So I think the first thing, how do you break it, is to acknowledge that it's natural. All traders are going through that. And like you've said in the past, it's about being able to separate yourself from the market and understand that the market is trying to tempt me to do things that I don't want to do. The market knows that my natural tendency is to want to be right. So I have to battle against that. It is a form of battle. It's a form of conditioning. You don't necessarily just wake up one day and go, oh, I don't care whether my trade wins or loses. You've got to take time to build up a thick skin and break down that addiction. And it might be that all you need to do is reevaluate your level of risk. You might simply be risking too much per trade, and as a result, you're wanting that trade to win because there's too much on the line on that each individual trade. Whereas if you were to reduce your risk, maybe go down again from 1% down to 0.5%, you desensitize yourself, you're more relaxed, and suddenly you're less concerned, because part of the addiction to winning is also the opposite, which is not wanting the trade to lose. So ask yourself, is it an addiction to winning, or is it that you're leveraged too much and you actually just don't want the trade to go against you?
It's avoidance as well, isn't it? Avoidance of loss avoidance. Another thing, in order to help someone break that habit of needing to win, is to look at overall profitability. So look at profitability. When we are talking logically, if we had a strategy on the desk here, and we said, okay, with a 1-to-1 risk-reward ratio, and it will have a 60% win rate, it's going to yield you X, let's say 10R. And with a 1-to-2 risk-reward ratio and a 48% win rate, it's going to yield you 20R. Which one do you want? And everybody logically will say, well, I'll take that one. And so what we're trying to do, or what a trader needs to do, is to think more logically. The problem is they don't. They get emotional once their money's on the line. And you stole my idea that I already had, which is, in order to reduce the emotions, reduce the risk per trade. So bring that down. You have to earn the right to trade. If you're emotional, drop your risk per trade down, and then earn the right to be able to trade that risk back up at some point in the future, once you've developed a harder skin and all of that. So if you can logically look at overall profitability and take win rate out of it, then great. Start to embrace profitability rather than thinking about being right all the time. Because logically we'll say, oh yeah, that one, yeah, it's only right 48% at the time, but it's way more profitable. It's twice as profitable. Okay, right. How do I get my mindset into that? Well, keep reminding yourself that this is the most profitable way for me to trade, and find other ways to deal with the lower win rate. So, and we can do that by saying things like, we've talked about this on other episodes. What does the average trader want to do? The average trader wants to be right as much as possible. So what should I be doing? Do I want to be the average trader? Because the average traders out there all around the world are all losing money overall because they're fixated on trying to be right as much as possible. So actually, I've got to keep reminding myself, do I want to be the average guy or girl, or do I want to trade to be profitable, the most profitable I can be? Oh yeah, I don't want to do that. And then write this stuff down, Post-it notes, whatever you want to use, reminders to tell yourself, if I do this, if I focus on trying to be right as much as possible, that's what all the other idiots are out there, no disrespect, are doing around the world. And what are they doing? We all know the numbers. 90% of traders fail. Do I want to be like 90% of the traders, or do I want to be like the 10%? Oh, I want to be like the 10%. Right. Remind yourself of that. Don't worry about win rate. Focus on profitability.
Great. On that note,
his name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.